Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Insiders have lots of reasons to sell stock. They could be selling it because they don't believe in the company anymore. They could be selling it to fund their life, but they really only have one reason to buy a stock, and that's because they're bullish on the future of the company and then it's going to increase in value. That's why Asana keeps popping up on my radar. I really like the company's products, but its CEO and founder, Dustin Moskovitz, continues to buy shares. Recently disclosed another batch of 1 million shares acquired. He's spent billions of dollars reacquiring shares of Asana. And I think that makes this company worth at least a second look. So that's what I want to do today. Look at exactly what the company is building, what their products are, and how their financials are getting a little bit better over time. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And I want to thank this video sponsor, The Motley Fool. Check out fool.com/ASYM for the top 10 stocks to buy right now. The first thing I'll show is the most recent SEC filing of the stock purchases. You can see here 507,500 shares were acquired on the open market for an average of $18.37 in the first batch and $17.71 in the second batch. In total, that brings Moskowitz's stake to nearly 90 million shares. So that's what keeps popping up and keeps kind of bringing my attention back to Asana. And before I get to the financial results and the trends there, I want to show what their products are and why this is a valuable tool. This is not just your average SaaS product. This is actually a core piece of a lot of companies' workflow. And you can see this is really a business management tool. So there's tasks, there's workflows, you can do Gantt charts, there's time tracking, project reviews, lots of different tools. Task management is really the top of the funnel. So you can assign different tasks to people and have contingencies. Like if I complete task 1, then task 2 goes to somebody else. So a really great tool for organizing a business, especially in a world with more remote work. But the challenge for Asana has long been that the company has been focused on growth, a phenomenal growth story, but has been losing money. So let's go through some of those results. Here is a look at Asana's quarterly revenue, net income, and operating expenses. And I pulled all these numbers for a reason. Revenue has been growing really significantly in the third quarter of 2020. The company had $59 million in revenue, and now that's up to $162.5 million in revenue. So definitely a great growth stock. That growth has kind of leveled out over the last few quarters as a lot of companies are starting to pull back on their software investments. But I would definitely still categorize this as a company that's growing. Net income is non-existent. The company is losing money, but you can see that losses have really improved over the last year. Losses were their worst at $118 million in the second quarter of 2022. That was now $71.4 million in the most recent quarter. The big reason for that improvement is an improvement in operating expenses. You can see that operating expenses have really stagnated over the last couple of quarters. That's partly because of some job cuts. So Moskovitz and the leadership at Asana seems to be kind of getting the message that they need to focus on improving the bottom line. The other thing that I wanted to show is Asana's improvement in free cash flow. Asana is now free cash flow positive. So that's a great sign for the company. And you can see that there's been steady improvement over the past year. From a cash perspective, this company is looking a lot better than it was just a year ago. One of the challenges, though, long-term for Asana is that they've been giving out a ton of stock-based compensation to employees. And that's why you see big net losses, but positive free cash flow. The losses come from the stock expense that goes on the income statement, but isn't a cash expense. So I think that's ultimately one of the challenges and is really a juxtaposition to Moskovitz buying a whole bunch of stock when he's actually giving a lot of stock away to employees. So he could actually change that decision and reduce the amount of stock-based compensation, which would actually help his own value in the company. So we'll see if that's an adjustment that's made in the future. I know there's a lot more pressure on a lot of these tech companies and growth companies to do less dilution through stock-based compensation. But the trends here for Asana are really interesting because I think this is a very valuable tool. It's proven to be a very sticky tool in the enterprise space, especially for small and medium-sized businesses. The financials are getting better and better over time, and you have a CEO who continues to buy back stock. He now has a controlling interest, owning over 50% of Asana. And you add all of this up, and it's at least a company that I think needs to be on people's watch list, because if these financials continue to improve, the bottom line could improve really quickly. Asana's gross margins are around 90%. So if they can maintain those operating margins and increase revenue, that is a recipe for great operating leverage. So what do you think of Asana as a growth stock and the insider buying that's going on right now? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.